Ready for a game-changing insight? If you've built up a nest egg of $300,000 or more in your traditional IRA or 401K, you're already ahead in the race to a comfortable retirement. But here's the bombshell that catches most people by surprise. You might be missing out on one of the smartest ways to keep more of your hard-earned money: strategic tax planning for your retirement accounts. Most people are proud to have saved up this much, points out financial advisor Ryan Thacker. But many don't realize that this is where the real opportunity begins. Tyson Thacker, his brother and business partner, agrees. Right now, you have the chance to dramatically reduce future tax bills if you understand how these retirement accounts really work. The Thacker brothers lead B.O.S. Retirement Solutions and have guided more than 50,000 families towards stronger retirement security. One of their top priorities? Making sure clients aren't blindsided by taxes, especially when withdrawing from IRAs or 401Ks. The reason is simple, yet frequently misunderstood. These accounts are tax-deferred, not tax-free. Let's break that down for a moment. IRAs and 401Ks allow your investments to grow tax-free for years, but the tax bill eventually comes due. Every single dollar you pull out in retirement will be counted as income and taxed accordingly. Many retirees are shocked by just how much they owe in taxes once they start taking withdrawals. In fact, some find they need to withdraw more money simply to cover those unexpected tax payments, a situation that can drain savings faster than anticipated. But here's where it gets controversial. Most families pay far more in taxes than necessary, simply because they haven't planned ahead. With the right strategies, you can control when and how much you pay Uncle Sam. Smart tax planning gives you more options, greater control, and ultimately more money to spend on the joys of retirement, like travel, family time, or pursuing a passion project. Consider this: tax planning in retirement could be the single most valuable and overlooked strategy for building lasting wealth. It's not just about how much you've saved, but how much you keep after taxes that truly matters. Modern tax-savvy approaches can help you lower taxes not only on IRA and 401K withdrawals, but also on Social Security, RMDs, required minimum distributions, and even investment gains. Coordinating these moving parts takes some work, but the possible lifetime savings can reach into the tens or even hundreds of thousands of dollars. And this is the part most people miss. Filing your taxes each April is not the same as planning for taxes in retirement. By the time your accountant files your return, it's just a record of what happened. You've lost your window to make proactive moves. Starting early, ideally before retirement, or as soon as possible after, opens up a range of options. But too many delay, then pay the price. Tyson Thacker drives this point home. It's not about dodging taxes. It's about not paying more than you have to. Most families miss out on huge opportunities simply by thinking tax planning isn't for them. Here's something to consider. There is no universal recipe when it comes to tax strategies. Tax planning is highly personal. What works brilliantly for one person may not suit another. It all comes down to evaluating your unique circumstances and seeing which strategies fit you best. Sometimes, even small tactical tweaks can lead to game-changing results. To help people take the first step, B.O.S.S Retirement Solutions offers a complimentary, tailored retirement tax savings analysis. There's absolutely no cost or obligation, even if you have no intention of becoming a client. All that's needed are a few straightforward details. Their specialized advisors will then dig into the options most appropriate for your situation. You'll get a side-by-side projection, what your taxes could look like following your current plan versus how much you might save if you implement the right strategies. This kind of analysis is particularly valuable for those with retirement savings between $300,000 and several $1 million. Precisely the group at risk of high, unnecessary taxes. Interested in seeing what you could save? Just call 801-990 888-888-5055 to schedule your free retirement tax savings analysis, or visit their website to request it. Remember, as Tyson reminds everyone, it's not what you make, but what you keep that counts. A small investment of your time now could turn into massive tax savings down the road. Ryan and Tyson Thacker aren't just retirement planners. They're authors of the Amazon bestseller, B.O.S.S, Retirement Blueprint, and leaders of an award-winning firm based along Utah's Wasatch Front. Naturally, every situation is different. Results aren't guaranteed, and advisory services are provided through B.O.S. Retirement Advisors, an SEC-registered investment advisory firm. Insurance products and services come through their affiliated company, and any advice shared here is for informational purposes only. It's not individualized tax, legal, or financial advice. Always consult your own tax advisor or attorney about any major financial move. Now here's a question that could spark real debate. Should retirement savers be responsible for learning about these strategies themselves? Or is it up to financial professionals to make sure clients don't miss out? Do you think most people realize how much taxes can eat away at their retirement savings? Or is this still a hidden threat? Share your thoughts below. Are you surprised by how much proactive planning can matter?